Hey everybody, this is John and welcome to the free video. So just taking a look at where we are in relation here. This is the reversion to the mean chart. So we're extended here. We're at 3 ATR away from the mean. Typically that means you can see we got 2 ATR a little bit and we kind of revert back. And then from, I'm going to change this to a daily. And if we look at this here, you can see that this is very bullish. You know, we've had a nice move up. All the moving averages are stacked. And so the question is, we're just kind of looking at this, like what's the next probable move from here? Well, from here, probabilistically, we come back to about 251, give or take, and launch the next leg higher. So the idea that I want to load up longs right here does not make sense to me, right? So if we look at the Qs, possibly a little bit more upside here. This has been a laggard, and 3 ATR is still got a little bit more room up there. If we look at the diamonds, they're of course just off and running. And then last but not least, I do also like to look at the transportation sector here, which has been holding up really well, but you can see is also starting to take a little bit of a pause here. So from there, then I'll look at the key stocks, and of course Apple is one of the main ones. Now Apple, which has gotten hammered here, has helped especially the NASDAQ, because remember, it represents 11% of the NASDAQ and about 5 to 6% of the Dow and the S&Ps, respectively. This rally has helped all the indexes, but so goes Apple, so goes the rest of the market. So right here, kind of an inflection point, and at this point, you certainly want to be watching this during the day to see what kind of action it's going to be doing. And then from there, of course, we've got the FANG stocks that are trying to get something going. Okay, Netflix obviously has had a great move here. Facebook, it's really been doing a whole lot of nothing, just kind of massive sideways action. But the real ones here that are going to be interesting are Google, okay, which got a little bit of a pop here, and Amazon, which has been struggling, and like Facebook has been stuck in a range. And they've both got earnings coming out in a couple of weeks, all right? And so that's what I'm looking for to drive these markets, all right? And so how are these earnings and everything like that going to impact all this stuff? All right, so real quick, I'll be doing a free webinar tomorrow, which is Wednesday, October 11th at 7 o'clock Central, and it is called Playing Quarters, Exploit Earnings Without Rolling the Dice. And so there's some really interesting tools and I think possibilities coming up in the current earnings cycle. And I'll scroll down here and show you a little bit about what I'll be talking about. So the idea with this is it's So the nice thing is, and I mean, you guys can read bullet points, right? So the nice thing is that there's 3 phases of the earning kind of cycle. And there's about, give or take, the 2 weeks leading into it. There's the day of, and then there's immediately thereafter. And there are different strategies for each one. Typically, what I find, a couple different things, is that where I'll take my biggest positions are right after. Those tend to be, you've got a lot of information and you've got a small moment in time where you can kind of take advantage of anybody else's pain and suffering, okay? Smaller positions I'll do day of, depending on the setup. Once in a while, things will come together and I will put some more money on the table. And then this, I've actually had, depending on the earnings season, this has been the most profitable. So for Q1 and Q2 this year, these were some of my most profitable trades. Q3, it was a little different. So that has changed a little bit. We're incorporating those changes into this. And so there's a lot of interesting things there. Now, the other thing, too, to keep in mind, and I like this, is how to find little unknown underground earnings plays. The idea with this is that we all get excited about the brand name stocks, the Apples and the Googles and stuff like that. But the truth is there's a lot of opportunity that's more consistent in the stocks that second tier stocks and some of the stocks that you haven't heard of. Okay, and we'll talk about that. How to play some of these binary events so they don't scare us. And the story stocks here that can be really scary, like the Pricelines and the Amazons. There's a fairly easy way to do that where it's not too scary or anything like that. And then just really how to ROI this and kind of capture this as part of your strategy. And I think one of the mistakes a lot of times people make is that, it's easy to sit there and track, okay, this is a squeeze play and things like that too. And then earnings trades are kind of like a one-off, like, oh yeah, an earnings trade. But you got to track those too and really see after 25 earnings trades, and I'm talking all 3 phases before, day of, and after, are they producing consistent profits? And it's surprising because what's weird about the earnings plays is that they can be such binary events. It's like, oh my God, this was horrible. I'm never doing it again. But the reality of it is, over the course of 25 trades, it can be very profitable. Also, what's nice is that if you structure it right and the trade, quote unquote, blows up in your face day of earnings, and I say that quote unquote because it should never hurt. It should be, you can know exactly what your max risk is, right? There are ways to trade your way out of it. And so I think that's important to understand as well. So anyway, it'll be fun. There should be a link here in the email or something like that where you can click on it and sign up. And otherwise, I'll see you there. You guys have a good one.